All right, welcome back. And this is going to be a weekly recap of the only trade that I ended up taking this week. Monday, Tuesday, and Wednesday was a tape reading session. And those tape reading sessions are on my channel on the live stream. It's pretty much there. And then I ended up taking a trade on Thursday, which was the only trade that I was pretty much content with taking on the account. And Thursday, in my opinion, was the only high probability day throughout the week. And on Friday, we had a bank holiday, which I pretty much just ended up just doing nothing. I did not show up to the charts at all. And let's just pretty much just jump and straight into the recap. And on that day, I ended up making 600 and almost $80, which it's pretty decent if you want me to be honest for a week that I was anticipating a lot of back and forth and choppiness, but I'm just gonna jump right into it. Looking into the chart, we are pretty much just going for all-time highs. At least that's my opinion when it comes to it. We see price on Wednesday digging deep inside of this buy side imbalance, sell side inefficiency, and it's also one of the things that I was talking about on one of the tape reading sessions that I was anticipating price to draw inside of this buy side imbalance, sell side inefficiency, because the market goes lower for two different reasons. We're either gonna seek liquidity or we're going to rebalance into an inefficiency. And on this case, we are rebalancing instead of this buy side imbalance, sell side inefficiency. So then we see Thursday, we open, had a little wick, the Judas win, tapping into consequent encroachment of the fair value gap, and then going higher. So price is clearly bullish. Now, when it comes into the trade that I took on Thursday, I ended up going short for a myriad of different reasons. If we're bullish, if you have a really good understanding when to anticipate a retracement, then you can pretty much just take the trade. So that's pretty much what it's called, a contrarian trade, when you're going against of the daily bias. And that was pretty much the trade I ended up taking. Again, it's a lot easier for you to be aligned with the higher time frame narrative, but if you have I wouldn't say I have the deepest understanding about retracement, but just an understanding enough for you to be able to feel comfortable with taking it, then go ahead and do it. And that's what I did. Going into the 4 hour, I'm just going to explain what gave me the confidence for me to take a contrarian trade going against of the daily bias. So we have on the 4 hour time frame right up here again, long term, I'm looking for the buy side liquidity right above here, and all-time highs buy side liquidity. In this instance, we have a 4 hour sell side imbalance, buy side inefficiency. Extend that to the right. And right above this high right here, we have what? Generated buy sell liquidity. So that's going to be a buy sell liquidity pool that will have a lot of willing buyers on the breakout and a lot of stop loss from people who went short from the breakout from this low. So that's going to be a huge liquidity pool for smart money traders to do whatever they want to do with it. So we see price digging deep inside of an area where we could anticipate price to reject from, because this is a SIBI. This is a sell side imbalance, buy side inefficiency, and we have buy side liquidity pool above this high. Now, let me make this very clear. The moment price gets into here, if we are bullish, we're just gonna run through it like a hot knife through butter, and we're not gonna form a smart money reversal and none of that stuff. When I see price getting inside of this 4 hour sell side imbalance, buy side inefficiency, the second thing that I'm looking for is, are we willing to form smart money reversal? And what is the smart money reversal? Displacement, changing the state of delivery. So we see price getting above a buy side liquidity pool. That's step number one. Second, we are in an area where we could anticipate price to reject from. And then the third thing that we're waiting for is smart money reversal. So on the hourly, again, and making it very clear that the only thing that I'm looking for, and I said it on the live stream, everything I just live, I said that I'm not anticipating price to just go above this high and form full on smart money reversal towards this low, because on the higher time frame narrative, we are bullish. Now, when we drop into the 15-minute time frame, what's one of the two reasons of why price go lower? To rebalance into an inefficiency. What do we have right here? We have a huge displacement towards the upside and no sell side delivery. What do we have right in here? This is a 15-minute fair value gap. Classification, buy side imbalance, sell side inefficiency. So when I'm looking at this, I'm like, okay, we had a nice run towards the upside. We are inside of an area where I am anticipating price to reject. We have buy side liquidity pull above this high. How far can I anticipate price to go towards? Well, we have a clear inefficiency right up here. Now, why am I not anticipating this low to get taken? We already did the damage. We already did and again, it's all in the live stream. We did the damage and these relatively equal lows. So this is a protective low. And also, we are bullish on the higher time frame. So the only thing that I'm looking for is to be able to catch a retracement inside of an area where I am anticipating to be determinist. In this case, the busy. Price doesn't need to go here. Price doesn't need to go here. And this is all you need to become profitable. Oh, this is all I'm looking for me to become profitable. So now that we understand the narrative, right? We are right up here, not anticipating this low to get taken, right? And I ended up leaving a contract to see if price would have gotten to this point, because again, me thinking something and the price doing something else is absolutely and utterly, it can happen, because I can be wrong from time to time. But this is it. So the moment we have this narrative, we go into the lower time frame, 1 minute, and the only thing that I'm looking for right here is just waiting for market to open. And this is the smart money reversal. I mean, it's there. You know, we see 930 opening. We went lower a bit. Then we went higher, took previous high right up here. This is manipulation. And what do you think I'm looking for? We have this busy right up here. And even though that I'm not a super huge fan of taking inversion for value gap, if the model and the setup it's clear, then I will. If we are bullish, what do we want to see from this busy? We want price to get into it. Maybe accumulate a little bit and then go higher. But what do we have? Price accumulates a little bit. And then we have this. If we are bullish, we don't want to see this. We don't want to see price closing below a buy side imbalance, sell side inefficiency. We want to see price staying above it, especially consequent encroachment of the busy. We see this wicks right here. Wicks are completely and utterly fine. We see wicks doing the damage, but body telling the narrative until this candle right here. What do we see? It displaces inside of this SIBI and boom. That's it. That's all I need for me to have an anticipation that we're going to inside of this sell side imbalance, buy side inefficiency. We are in an area where I'm anticipating price to reject. We took all this buy side liquidity pool. We have it unfilled 15 minutes. Inversion for value gap. I ended up going long the second this candle closes. Short. I ended up going short the second this candle closes. The next candle we see using the busy now as an inversion for value gap. And I ended up going short right up here. Like right there. Stop loss right there. Targeting the low hanging fruits. I ended up going with 4 contracts. I sold 3 contracts right here. Wow, amazing move. Like just butter. This is just amazing. Selling 3 contracts right here, and then leaving a runner towards here just to be part of if it was gonna go there, just to be part of the market maker model. Even though like it's all in the live stream, I wasn't anticipating that low to get taken. That was my anticipation, and it didn't get taken. And then we just accumulated a little bit, and I got stopped out on my last contract on this candle right here. And this little trade right here ended up profiting me $679 for the week, and that was all I needed. That's all you need. That's absolutely you need. The account is going pretty good. This month has been pretty good. I only had 1 losing trade, and yeah, being super selective. That's pretty much all I'm focused on. Being selective with the trades that I'm taking, being selective with what they do I want to be part of. And it's one of the most important things to really learn when not to trade. It's more important to learn when not to trade than when to trade, because there's a myriad of different things that you have to understand. Where, okay, if we have this news at this point, then I'm not gonna trade at this point. If we have this at this point, then I'm not gonna trade at that point, and so on and so forth. But that was the little recap. How do I feel so far? I mean, job is not done. We have to keep ourselves cool, calm, collected, and keep on grinding and keep on doing the right thing. And yeah, forgetting about the past pretty much. Not time to really sit around and celebrate when the job is not finished. Keep on improving and going back testing, journaling, and doing the things that must be done. And that's pretty much what's gonna be my focus of this weekend. Putting a lot of work into it and grinding until we get to the point where money is not an issue anymore. So that's pretty much it. That was the little breakdown. And yeah.